Yes, sir. Yes, sir. Here we are once again. Yes, sir. The Savage is on once again, and we're live, baby. We're doing it live, just like my boy would say. My boy, what's his name? Bill O'Reilly. Bill O'Reilly would say, "We're doing it live, baby. We're doing it live." Anyways, here we are once again, my fellow simpletons and degenerates. I hope you guys are doing great. I hope you guys are having a great time, um, and in fact are chilling with your families, significant others. Um, More than anything, I hope you guys are in good health, and you guys are having an amazing time. With your families or whatever it is that you are, with your friends. All that matters that you guys are doing well and that you guys are taking advantage um, of the weekend and the beauty that life itself provides, the opportunity, and obviously, you guys are taking advantage of everything else that life has to offer. Obviously, taking advantage of the fact that, in fact, tomorrow the market is going to open, and that a lot of our stocks are flashing some signals, and that's what we're going to talk about. Do we got Fed rate cuts hopefully happening on Wednesday? But what does that mean, right? Like, is it 100% sure that we're going to get Fed rate cuts? What are we going to get? Are we going to get 25 basis points, 50 basis points? So much to talk about. Um, we have a lot of our Savage 20 uh, flashing signals. But what are those signals, right? Like, what are we looking for? How do we capitalize on all this opportunity, right? Uh, Stock market, S&P, Nasdaq, um, they're at all-time highs right now, right? And we just we want our piece of the pie. Everyone out there is telling us that retail should not be trading, that we should just be buying stock and holding forever. But we refuse to listen uh, to all those experts out there, right? We refuse to listen to um, Jim Cramer and all these other cats on Fox News telling us that we're not smart enough to take our destiny into our hands, to take our portfolios under our wings, and to start selling covered calls and cash secure puts. Yeah, that's pretty much they're telling us we should just pay a fee to have Charles Schwab and Fidelity. Um, uh, what's another outfit? Solomon Barney and all these other outfits. Pay them fees so that they can manage our money, and we should just be happy about it. Take what they give us and be grateful with the 5% returns they're probably going to give us every year, and on average, right? 5 to 10%, and then we're going to pay our fees, and we'll just keep dumping money into our retirement accounts, 401ks, and the stock market, and then let them manage it because we're obviously not smart enough. Um, the hell with that. I say, you guys, if you're watching me, you're taking control over your own finances. You've taken control over your life, and you want to outdo and outperform the market to the tune of um, 30-40% a year. It's absolutely possible. It's very feasible. And guess what? We're using one of the most conservative approaches to it. There's nothing. There's nothing. There's no magic. There is no. There is no. There's no. Um, there's not a get rich quick scheme, right? This is not some arcane information. Is out there. It just people are under the illusion that if you are going to enter the stock market, you need millions to get in, right? If you're not a millionaire, if you're not making $500,000 a year or $400,000 a year or more, then you're just not. The stock market's not for you. You're going to keep going to work 80 what is it 40 hours, 40 hours a week, and then work up to upwards of 50, 60 hours a week, and pay your taxes, and pay your rent or your mortgage, and that's it. You're going to retire in 30, 40 years, and you're going to take whatever it is that they give you from your 401k, and you'll be grateful, you'll be thankful, and that's where that's where it stays, right? But no, I think we're here to do better than that. I think if you're watching me, you're one of those few people that said, "The hell with that." I don't want to be on this hamster wheel, until I'm 70 years old and my body's broken down. I think I'm going to take control over my own finances and my life, and I'm going to, sell covered calls and cash secure puts, and going to make money whether the stock market is red or the stock market is green, and I'm going to pay bills with income that I'm going to generate out of thin air. And it's not rocket science. It's not, there is no black magic here. It's just doing what the big outfits do and getting paid for it, and handsomely. Once you decide that this is exactly what you want to do, you lose the fear, right? And you get into some relatively good stock that pays good premium. What do we got here? Anyways, so yeah, Jude K, Moneymaker Juan, Charlie C2, Hector, James of the Trees, and always be writing. Good evening, my fellow simpletons and degenerates. If you're watching me, you're already ahead of the game. I did tell you guys I was going to go at 5 p.m. today on this Sunday, and I have. I read some things on the Wall Street Journal, and I thought it was very interesting, and so I figured, yeah, you know what? Let me share this with the gang, and see what's up. Jude K saying good evening, Savage. Moneymaker Juan is saying good evening, all. Charlie C2 saying hey, Savage, good evening to you and everyone else. Hector, hola. Charlie C2 saying any opinion on RZVL Resolve AI, looking at $6 puts out to February 2026, paying $2 premiums, trading just below 7 after a nice pump last week. It's already pumped. Ahoy, Lucky 2, says James of the Trees. Good evening, Savage and all, says always be writing. So, okay, before we get into our ZVL, remind me in a little bit. I don't want to lose my train of thought. And give us a thumbs up, share, and the deal, guys. Subscribe, the whole hoopla. Trying to, I just noticed my channel is growing a bit, and I think that's awesome. I'm excited, man, because I have been going live for like a month now, every almost every day, right, during market hours and sometimes on the weekend. And I see that my channel is gaining traction. I see the algo, and thank you, you guys. What you're doing works. You guys are giving me that thumbs up. You guys are sharing. You guys are making comments. And I'm very excited, man, because I see that my channel just crossed some threshold, and I just find it very interesting, and I think it's cool because I go live so that I can in all fairness, yeah, I'm trading the stocks I talk about, but I also want to share my experience, so to speak, in a vlog type of way, right? Like I talk about my trading habits and how I'm trading during the day. I go over the stocks that I am trading, and I happen to go a step further than some cats that go on YouTube and say, after a stock has ran, right, they'll show you like a screenshot of look how much money I made, or they'll send you like they'll say, look, 30 options and they're so green, I made $50,000. It's like it's a screenshot. It could be anyone's screenshot, and they always show you after the fact, right? I tell you guys, like I've even shown you sometimes when I make the trade live and I say, look, I just did that trade. Or look, I just sold this cash secure put. I just got out of that trade. I even shared a couple of losses, right? When I think I sold some Lucid for a loss, or I ended up getting out of I forgot what stock it was, but I had I'd taken out a little loss, and I said I'm going to move this money over to laterally to another stock that's going to give me a better premium, and it seems to be a lot more moving a lot more and creating more premium than the other one that was a little stagnant. And it's okay. Sometimes I tell you guys, sometimes you gotta have a good conversation with yourself and pull the plug and say, I want to take my money this route. It's got nothing to do with this stock, but it's just not moving enough for me. And I need to take, I need to have premium coming in and out every month, every other month. And I need to make this money real, right? So that you can keep growing your portfolio. And anyways, so that's exactly what I figured. I'd be as transparent as I can be with you guys. And I talk about trades, and you guys are following me because you guys are talking about the same trades. And you guys will know whether I make money or not. And so, anyways, I thank you for the thumbs up. Thank you for tuning in and for helping my channel catch a little more traction. The goal is to make a million. I mean, I'm sorry, 100 millionaires on this channel, and it's no BS. And I don't think that's out of this world. I honestly think people that are watching me, are watching regularly, and we all have kind of like like a similar goal, right? That we're trying to attain. I think we're all trying to get off of the hamster wheel, and we're all trying to retire earlier than we should, and we're all trying to just take advantage and take a bigger piece of the pie than we're supposed to be given, right? We're actually taking it, and when I say, to you guys, uh, give them nothing, I mean just that. I mean, give them nothing. These outfits out there, they don't deserve anything from you. Give them nothing, but take everything. Whenever you sell a covered call, whenever you sell a cash secure put, set your stink bits out there and get the biggest chunk you can get. This is why I don't like weeklies, right? So that I can write out 2-3 months, and that premium is going to be chunky and bring me in, 15-20% of my return on investment right off the bat. And sometimes more, but anyways, that's the gist of it, right? What was I going to share with you guys? That's right. I told you guys that I wanted to share with you guys this one op-ed. It's on the Wall Street Journal, right? And let's see. Let me make sure that I'm able to, in fact, share my screen here with you guys, because this is everybody. I mean, this is all Americans, and well, not all Americans, but the ones that invest, right? And this is something that I think we see more often than not. And this is somebody out there um, who has been working his whole life. He's doing it right, and he's trying to do um, the best possible with what he was given. And he has a family. He's a husband and a father, and I just thought it was cool that I'd share it with you guys, right? Because this is like all of us, and I think that the guy's sitting literally on a gold mine. If he just has to lose that fear, and he has to take that step. And I mean, that was me at a point, and I think that's been a lot of you guys until you decided to take charge, of your own life, and take your portfolios under your wing, and start trading. This guy is saying, I'm 67, my wife is 48, is financially illiterate. How do I teach her to manage our money? Right? After all, I won't be around forever. And we have a 12-year-old daughter. I have $1.1 million in traditional IRA and 250,000 in cash. To me, that doesn't seem to be somebody that squandered the opportunities, right? This is somebody that seems to have taken a serious look at the future, and decided that he's going to put away a nice chunk of money into his IRA. He's got some cash. He's probably got a house. And he's trying to look out for his wife, who he says is financially illiterate. And there she is. The guy is obviously a good guy. He's trying to look out for his kids, and trying to look out for her. He's like, he's basically writing somebody that, on the Wall Street Journal. He's saying, I'm 67-year-old male and married. We have a 12-year-old daughter. I have houses paid for, and $1.1 million in traditional IRA, $250,000 in cash. One home is an Airbnb, and the other is our residence. My wife is financially literate. She's 20 years younger than I, and I do all of our investment payments. She works part-time. I have set up a trust, but I'm scared for her if I should pass. What do others handle situations like this? Husband and father, right? And I think that that's a lot of people, right? You do the best you can with what you've been given, and then you don't want to just squander everything, because you want to make sure that those that you care about are taken care of, right? And his wife, he says, is financially illiterate, but that was everybody, right? Every single one of us, and all it took was just that little step. And I think that sitting on as much money as he has, if he would just teach his wife how to write cash and cure puts. Imagine having forget the $1.1 million, right? Take a million, leave that 100,000 and the $250,000 in cash. Take that 401k, right? Got $1 million. You put that into a Charles Schwab account that it's an ETF that regenerates 5%, 4 to 5% every year. Just right there. If he was to put it into that fund, it would get $50,000 a year on that, just by leaving it alone, not doing anything. She would. But check this out. What if he did cash and cure puts? What if she did on $1 million, right? Some SOFI cash and cure puts, and she took let's say she traded options and she went to 2027 June, and she sold some SOFI $30 cash and cure puts, right? Say she did $300,000 and she sold $130 cash and cure puts out of that $1 million, which means she would take $300,000 basically, right, off of that TTF, and she would get, said, $985 per contract, right? If she was to go to June, that's almost $10 back for the $30 per share that she would put out. So if she was to do 100, she would get $98,495.72 after paying the whatever fees, right? Think about that. So by her taking $300,000, she would get $100,000 almost back in premium. And guess what? She doesn't have to do anything. This is just setting it away. So in addition to the 5% that she would get on that $1 million, she's already made $100,000 here. So that's $150,000 she generated on that $1 million, right? Done nothing. And then she still has $700,000. Okay, so let's say we take SentinelOne, a cybersecurity company. They're not going away. They're not going away anytime soon. And we go to January 2027, sell some puts, and we go to January 2028. Let's do that. They just opened up. They don't even have anything. Let's go to 2027. You do $200,000, right? So you do 100. You do $120 cash secure puts expiring January 2027. You could get $43,995 back. Okay, so right then and there, $500,000. If she would just do 100 contracts on SentinelOne and 100 contracts in SoFi, cash secure puts. She's not buying the stock. She's saying, I would buy this stock in 2027 at this prices, and I want to get paid for that. Here's $500,000. She would get $43,995.72 back, and then she's she's got her money in a fund that's going to give her 4 to 5% back. Say, so she's already got $50,000 back on just interest, right, on that $1,000,000, and $44,000 here, right, and $50,000. Sorry, $100,000 in SOFI. So she's basically making almost $200,000, $194,000 back on premium alone in interest. Now, think about that. In a year and a half, little under, right? Well, the other one's June 2027, but let's say a year and a half, right? What is wrong with that? Are you telling me that this person would not be taken care of with $1,000,000? It sounds like he's very apprehensive. This gentleman is about leaving his wife because she's financially literate. Like, seriously, does it take that much financial literacy for us to do cash secure puts and covered calls? It really is not that deep, right? And think about it. You take $1,000,000, right, and then you put them on escrow. Basically, that's what you're doing. You're putting it in that ETF at Charles Schwab that's going to generate like 5% back every year, right? And remember, it compounds. So the first 12 months, you'll get 12% of that $1,000,000, right? But then the next year, you're going to get 5% of not the million, but the $190,000 that you. So it'll be 5% of that. So it'll be $1,194,000. So it's compounding. It's amazing how this happens, right? And I don't think SoFi is going to be $30 in June 2027. I don't think Channel One is going to be $20 in 2027. But that's worst case scenario, right? I mean, that's crazy. This guy is basically he's sitting on a gold mine, and he's very nervous about leaving it to his wife because she's financially literate. I don't think he's giving her a fair shot. I think if he just took her to a couple of financial literacy, courses and told her about covered calls. He seems like he's financially literate himself. If he was to tell her about covered calls or cash secure puts, I think she'd be golden. And she still has $250,000 in cash. So I mean, that's everyone, and to think that someone having over $1,000,000 in two properties, just there available, feels very nervous about the future. It just tells you where we are, kind of, in the economy, where even that much money seems like it's not enough for a lot of people. And so yeah, I just thought that was extremely I just thought it was fascinating, right? And I thought that you guys would appreciate it because, I mean, think about it. If you guys had access to $1,000,000 in cash, it's that simple. You just have to just take the Band-Aid off and stop thinking in terms of like, it's so much money. Like it's 100 contracts here and 100 contracts there. Boom. Right. And if you really want to be careful, you can do 10 contracts of NVIDIA. Right. Think about it. We did $500,000, right? We still have $500,000 to play with. What if we decided to go with NVIDIA? Right. And then we went to January 21st, 2028, and we sold $200 cash secure puts. Actually, they just went on live. So let's go to June 2027. June 2027, $200 cash secure puts on NVIDIA bring you $43.93 per put, right? So, and that's not doing stink bids. This is just going at market price, by the way. You would make more money if you go and ask on a stink ask. You would make a lot more money. But let's say you decided, nah, I want to be conservative, right? Well, if you're conservative, you really would be a stink ask. But let's just say you don't want to like go back and forth and you want to take advantage of stuff where it is now before it goes down a bit. and you do 10 NVIDIA $200 cash secure puts, that's $200,000, right? And you get paid $43,899.58, right? So you just, remember we were like at 190, right? Like now we just went from 190 to, 234,000 in premiums and in premiums and in interest on $1 million. So that's insane. And we still have $300,000 to play with. So if we decided, okay, we did NVIDIA, that's $200 in 2027 is quite a conservative approach on NVIDIA, right? And then you can take, the rest and be a little, more cavalier with and say, you know what, I'm going to take some stocks that I think that I want to take more of a risk with. You go to January 2027 on WeBull, right? And you say, you know what, I don't think WeBull is going to be $20 in 2027 January. I think there'll be a lot more, but I'm going to do $20 cash secure puts. And you can bring in $950. The last trade was $950, right? So you do $20 cash secure puts, and you're gonna do 50 of these, which will be $100,000, right? So you do 50 of these, you're bringing in $46,247.86. So we went from like 233, 234,000, and now we're gonna add 46. So now we're like at, I don't know, say $280,000, right? I mean, and we still have $200,000. So we can get close to $300,000 or more that we can bring in with $1 million if we just did premiums and interest. And then we're bringing in stock that we like. We bringing in stock that we know we would not mind owning, and stock that is bringing in some nice premium. I mean, think about it. This gentleman, I can see, why he's nervous, but he's sitting in a gold mine, and if he just decided to teach his wife, look, this is covered calls their cash secure puts with $1 million, you could be bringing in, let's say these are, we're doing 2027, so we're basically taking care of 2026. We go to 2027. So in the next, I don't know, year and a half, right? Because we're almost at 2026 if you think about it, right? It's only like 4 months out. So a year and 4 months. So that's 16 months, right? So 16 months, you can bring in, if you were to like average and all that stuff, right? Let's say $200,000, $250,000 a year on that premium. Imagine bringing in $300,000 of premium, just premium and interest, and that being conservative, right? It's possible, but you just got to do it. You just got to say, I'm done fucking being scared. That $1.1 million sitting in a 401k, that's done. That's like, imagine if the fucking stock market tanks and then we go down 20%, 25%, in the 401ks take a hit of like 25%. They just lost $250,000 over that. And do you think that company managing that 401k is not gonna want to get paid? Fuck you, pay me. Like from that Goodfellas line, right? No, oh, yeah, you can't make the mortgage. You got you can't pay the. Fuck you, pay me. Oh, your wife is sick, and fuck you, pay me. No matter what, you gotta pay. So it's like whether you lose $250,000, you gotta pay them. Whether you make $100,000, you gotta pay them. You why would you be paying to trade and make money? That just makes no sense to me. Like it's something you can very well do. You think, oh, 1%, 2% is not much, but like you're trading $1.1 million, you're talking about over $20,000 a year. That's a lot of money, right? And you just saw that. We just bring in. We're not going crazy. I was bringing in with those cash secure puts, like 30%. There were 30% puts. There weren't anything stellar. There's some puts that are bringing you in 50, 60% easily. Like that last WeBull one I showed, that was like almost 50%. So again, I was being very conservative with the first, $700,000. The other $300,000 you could take a little more risk with because you've already brought in this much money. Let's see what happens with, these other ones that are not a bad bet at all. And you've done your due diligence. These companies are good for it, and you're getting paid to buy that stock. At $10, it's a $20 stock basically, and you're getting paid. You're buying it saying at 20 in the future, and you're bringing in $10. What's wrong with that? Nothing. Um, Andres de la Torres in the house. Always be writing and saying, Savage, good evening, Savage. And all do the same. Let's go. I like this thought experiment. Juan Velasquez saying, happy Sunday, everyone. Good to be here, Savage. Hi, Juan is saying, Charlie C2. Juan Velasquez saying, Charlie C2, great to hear from you, my friend. What do you think about this, guys? I think that we might be in a buy the rumors, sell the news this week. Yeah, that's where we've been at. Rate cut will be good this week, but it's pretty much already priced into the market. I agree. I think that's already being priced in, and I think that this little hit that we took the last week when those numbers came in, that over 900,000 jobs were actually like fugazi, right? And if we were actually to rework the numbers and we adjusted and went back retroactive, month by month, we actually lost jobs, right? And I think if we were to take that same approach and looked at the economy, and we took out the Magnificent Seven, right? What about the other Magnificent 493? I think if we took out the Magnificent Seven and just used the 493, I think we would see that we are in fact in a recession right now. I think so. I am willing to bet, and I am a betting man actually. But I'm willing to bet a hefty sum that we are actually in fact in a recession right now. And I'm not trying to scare anybody. Like, that's opportunity for us, right? Like that means that the stocks are cheap. The stocks are going to be cheap. We're going to get stuff on the cheap. I'm going to be able to go take out loans like I did in the past. And when I took out loan, oh my God, I took out loans and I bought Palantir at like 8, 9. I bought SOFI at like 6. I bought Nvidia at like 14, 15 bucks. I'm sorry, not Nvidia, Unity. Nvidia was like at, I don't know, like $600 or something like that. But anyways, the whole point is that Tesla was like at 150. I think that I did some 190 cash secure puts because I didn't think it was going to recover that much, and it just went. Matter of fact, this last week ago, I bought those cash secure puts back for like 1/4 of what I paid for them. It was something insane, but I took a lot in. I took a lot of money on those Tesla puts. And I bought. I received a lot of money last week, and I just went straight into the market, saw where the opportunity was, and I brought in. I think Friday I made like close to $6,000, $6 or $7,000 in premium, and I only traded. I think half of like I had $40,000, and I in total, and then I think I traded. That I came up with, right? And I traded like $20,000, but I brought in like a lot of money in premium. And these are good companies. These are, just through cash secure puts. I did, and then I used that premium to go and buy more stock at market price. I think I bought some AI. I bought some more. I bought some AI. Where else did I think I bought? Oh yeah, SOXS. I bought a few hundred shares of SOXS, SQQQ, and I bought 200 shares of VIX, because it's like at 14 or something like that. So I'm just getting ready for that spike, And if I'm wrong, then I'm wrong, right? That's why we trade. But you have to look at the overall conditions right? And you got to look at all the indicators are flashing right now. The economy in China is shitty, extremely shitty. I was reading these reports where I don't know if you guys are kind of familiar with China and like their customs, right? But there's they have an equivalent to Saint Valentine's or Valentine's Day that we have, and it's supposed to be like their Thanksgiving, but for lovers, right? Thanksgiving for us, like it's a big holiday, and a lot of people spend money. Um, it was abysmal. I think I think stores actually lost money. You have flower shops that were banking on selling whatever they had. They were like, I don't think we're gonna have enough flowers, and they had a markup obviously on the flowers that they had, and like nobody came in to buy them, right? Nobody came in to buy gifts, and it was a big deal in China. They were like, "What's going on with people? Why aren't they? Are young people not in love anymore? Are they not romantic?" And that's not it. The thing is that they actually were interviewing people, and young men actually were saying, "We're just tired of being taken advantage of. This is all a marketing ploy. We don't have money." The guys, they think they half of the people they interviewed had like they were unemployed. I've never seen that in China. It's just, everyone has a gig in China, no matter what. And they were like, yeah, I don't work. I'm not working. There's more men than women, which is like very, very fascinating. But and it was just China's telling you what's going on because you're starting to see that their exports are down, imports are down. Um, I mean, tariffs are hitting big right now, and I think that we're going to start seeing, the effects pretty soon. Uh, all these, all these, the consumer is going to end up paying these tariffs, and you're already starting to see it. Prices are creeping up every so slightly, but they're creeping up little by little. And there's a new word you can Google it: sneakflation. Sneakflation, like the sneak in, right? Sneakflation. And what they're doing is inflation and the tariffs. They're they're pricing it in, and they basically passing it on to the consumer bits by bits. They don't want to this thing called sticker shock, right? They don't want you to get sticker shock. They don't want to go and tell you your $100 shoes are now 150. They're not doing that right now because they know it's going to be bad. What they're doing is last month they added 10%. A month from now they're going to add another 10% to that 10%, and then to that 10% they're going to add another 10% right before Christmas, right? So like right then and there they just you're like, oh, that's 30%. That's not, because it compounded, right? So like you were paying first 100, then 110, then you pay 10% of that 110, which is $11, and then you pay 100, 10% of that $121 or 111, which is 121, and so on and so forth. So it's like it's sneakflation. That's what they're doing, and I mean, Target is telling you that their numbers are not good. The people are shopping a lot less. Target and Walmart are telling you that, and I don't have to tell. I mean, this you don't need anyone to tell you. You could just look at your own life, right? Do you feel like things are worth the same as they were a year ago or a year and a half ago? No, things are way more expensive right now, right? And then if you just look at your circle, right? You probably know some people that have lost jobs. You probably know someone that has been looking for a job for a long time and they just can't find it, right? You may have lost a job yourself and you got laid off and are trying to figure it out. I mean, there's a lot going on right now, and it's just like all these indicators are just flashing. But because the Magnificent Seven are like at an all-time high, right? And we're just not seeing it. You would just, we refuse to see it. We refuse to see these because we just want the market to just keep going up to keep making money. But that's just not the way things work, man. I think the rug pull is coming, and I think that buying some SOXS and buying some SQQQ, I think you're good. I think you'll be all right. There are 52-week lows anyways. It's not like you're buying SQQQ at 50 at $40, right? Like it's like $14 right now or something. SOXS was like $30, $50 a share, like a few months back. Right now it's like at $6, like 640, 650, something like that. Just give it a moment. Let's see here. Juan Velasquez is saying, I agree, Charlie C2. I went ahead and bought some SOXS, just like Savage mentioned last week. I don't think we might hit the 100 QQQQ day moving average. We never know. If J Powell says anything about a second cut coming in October, makes markets will pump higher, and that's what I'm hoping. Well, I mean, again, you're crossing your fingers and hoping, right? But that's not what I want you guys to do with my channel, in my channel. I want you guys to not hope. I want you to see what the stock market is telling you, see what the stocks are telling you, and take advantage of that. What are they telling you? Are you gonna hope that J Powell cuts rates or gives us 50 basis points? Or are you gonna go and look at UiPath and see that it's close to the 52-week low? There was 938. Right now it's 1139. It's had stellar year-over-year growth, and the past month is up 8%, but the last week it's actually down 1%. It's sitting at 1145 right now, and you can own it. You can own it by going to a November 21st and selling a cash secure put for an $11 cash secure put and bringing in $52 for it. Not the greatest premium, I know that, but it's a great company. It's a recession-proof company, and you're gonna get $52 if you do decide if it is under $11 on November 21st, and you got paid $52 to buy it. And if it is in fact under $11 on November 21st, you could then do December or January $10 cash secure puts and an average down. And then just keep stacking your chips, keep growing your portfolio. That's how you do it, my friends. And guess what? Probably this stock is going to be closer to $12, $12.50 in November. And you're going to get your $1,100 back. And then you could look at where do you go next? There's nothing wrong with that at all, my friends. Are you going to wait for Rugman to do his thing, or are you gonna say, you know what? I'm looking at QBTS, D-Wave Quantum, because I want to get into this quantum computing. I want to get in on it, right, and kind of start a position now. And this is a great company to start in. It's 1765 right now. I'm going to wait for it to go down 5% between now and Wednesday. And if I can get in, I'm going to do some $17 cash secure puts out to January 2026. And those $17 cash secure puts are going to bring me like $3.50, $4. What is wrong with that? You're basically going to get the stock for like 14 under maybe 13.50 a share. And the stock is it's 1765 right now. There is nothing wrong with that. You're protecting yourself, from a downturn, and you're buying a really, really good stock that, it's going to be a very major player later on in life, like in the next 5-10 years. But right now, you're starting to accumulate, and get a position in on this quantum computing market. You're not going to wait for J Powell to do anything. You're going to start seeing what the stock's telling you, and then you're going to take advantage of that and use it, and deploy your money as you best see fit. Juan Velasquez is saying that's a great point, because right now it's just a 25 rate cut built into it. Yeah, well, I mean, it could be 25, it could be 50. I think don't be surprised if he says 50. I think it'll be great. But at the end of the day, it's just putting a Band-Aid on a bullet wound, right? I think that once all these numbers start getting worked out and the real numbers start coming in, and we start seeing, I was seeing this report on small farmers from Nebraska. Holy shit, they've lost 70% of their workforce. 70% of their workforce, and all of the federal subsidies that we're getting, they're not getting them right now. A lot of them are going bankrupt. A lot of them are actually going bankrupt. There's this dude that was crying, with his wife. He said, I'm a fourth generation farmer. There will not be a fifth generation because I'm now selling my farm to, I forgot what the name of the corporation was, but maybe that's part of the plan. Maybe that was part of the plan for small farmers to get hit so hard that they are just going to sell and walk away, and they're going to sell for like fucking pennies on the dollar. And big corporations who are somebody's friends are going to come in and take over that farm and make billions and billions of dollars on some of the most fertile land. Um, Sometimes people like to get played. I mean, I don't know what to tell you, but as long as we don't get played, you know what I mean? That's what I care about, my friends. Um, let's see here. Um, so another thing. I'm sharing this one, and I'm going to go here. I'm going to share this with you guys. Okay, let's see. Boom, there it is. All right. Weak labor market data overshadowed a sticky inflation print last week, keeping investor expectations intact that the Federal Reserve will cut interest rates at its policy meeting on Wednesday. Right? Government data released Thursday showed that consumer prices rose 0.4% in August from the previous month, an uptick from July's 0.2% increase. Meanwhile, separate data showed weekly jobless claims rising to 263,000, the highest in nearly 4 years. This is counting the pandemic, folks. Counting the pandemic. Up from revised 236,000 the prior week. Okay. The Fed weighs its dual mandate of full employment and price stability when deciding whether to change interest rates. Given the dynamic of a slowing jobs market coupled with sticky price increases, that's sticky inflation, man. Wall Street strategists told Yahoo Finance that the Fed has a complicated decision ahead. It's not 100%, my friends. It's the worst kind of setup for the Fed. Claudia Sam, who's the New Century Advisor chief economist and former Fed Reserve Board economist, told Yahoo Finance. They will not be cutting because we have a good news on inflation. They will be cutting because we have had bad news on employment. So inflation is still high, but unemployment is really bad. So those are not good setups. Sam expects the Federal Reserve to cut rates by 25 basis points during the first two-day meeting this week. She noted, though, that inflation is still too firm. Other strategists agreed inflation is still elevated. It's been elevated, and it's moving in the wrong direction right now. Colin Martin, fixed income strategist of Schwab Center for Financial Research, told Yahoo. Sticky inflation may keep the Fed cautious after September. RSM chief economist Joe something said, yes, you're going to get your rate cut out there in the trading land. But I have to tell you, the underlying tenor of the data doesn't suggest that it's a lot that you're going to get 3 rate cuts before the end of the year. As of Friday, investors was pricing 76% probability of 3 rate cuts, according to CME Fed Watch, as the labor market shows increasing cracks. Thursday's jobless claims data was the latest to underscore the slowdown. A sweeping jobs revision released earlier this week showed that U.S. employed 911,000 fewer people between April 2024 and March 2025 than originally reported. Still, the slowdown doesn't appear to be pushing the economy over a cliff. Not yet. We're not getting this hard landing like collapse in the job market. Economic Cycle Research Institute co-founder Lakshay Mashudan said this could get rough at some point, but it's not yet. Despite concerns about the economy and job market, Wall Street strategists are still optimistic that AI will power stocks bull run further into 2026. This week, Oracle's robust AI backlog stunned investors, underscoring the tech sector's strength. With robust tech earnings, momentum, and imminent Fed rate cuts ahead, we do not see elevated valuations as a reason to shy away from diversified exposure to the sector. Um, I mean, that's what I'm trying to tell you guys. Uh, elevated. We do not see elevated valuations as a reason to shy away from the diversified exposure to the sector. Valuations are high, man. Like stocks are too expensive. I don't think Nvidia should be where it is. I don't think Palantir should be where it is, right? They're too expensive right now. Nvidia should be closer to 130, 140 a share. Fucking Palantir should be like $80, 80, $90. But that's where they're elevated because people are trying to pay a premium because they saw the stock at $8. They didn't buy at $8. They saw it at 20. They're like, eh. And now when they saw it at 90, they were like, oh, I'm gonna go in and buy at 90. And then they ran it to like 150, 160, 70, and they're like, ooh, but the stock doesn't belong there. It's just they paid a ridiculous premium to own it. Same thing with Tesla. Tesla should not be where it is. No way. Tesla's closer to 250, 240, 230. But the people think it's $400 and they want to pay a premium. Why? Like there's, if anything, people are not buying Teslas at all anymore right now. They're everywhere else. Elon alienated his biggest market share. And those people have returned those cars or are selling those cars or not driving. They don't want those cars. They're going elsewhere. They're going to Rivian. They're going to a Polestar. They're going to Lucid. It's just, for whatever reasons, people want to prop up Tesla. It's all good. I'm just saying, there's a reason that during fucking earnings, I bought some puts on them and I made good money, right? That's why. Let's see here. So yeah, guys, I don't know, man. I just I think that right now stocks are too high. A lot of stocks are, but if you see stocks at 52-week lows, or close to it, don't be afraid to go in with some cash secure put, especially if it's stocks you've been eyeing, right? Because you're if a stock was $50 and or $60, $70 and it's at 10. And it's a good company, got good fundamentals. It's just gotten hit for whatever reasons. It decides to be where it is, and it's at 10. Don't be afraid to sell some $8 cash secure puts and bring in a big chunk, or $9 cash secure puts and bring in big chunk of premium, because it's a lot. It's a lot less likely to go to 4 than 3, right? Because it was already at like 60, $70. So like that's a huge. It was easier for it to come down where it is than for it to go from 10 to like 8 to like 7. It's just a lot harder. I mean, for it to go down. And so don't be afraid to go through cash secure puts, my friends. Where is the opportunity tomorrow? Well, just look at what the stocks are telling you, man. Right now, it seems that the pre-markets or futures are red right now, right? I think people are nervous about this week coming up. Nothing is for sure. Don't be afraid to go in with some cash secure puts into a company that you've been eyeing, right? And putting in a stink bid, right? What is a stink or a stink ask? What is a stink ask, you say? Well, say, for example, let me see here. Snowflake, for example, right? Snowflake, it's $220 a share right now, right? And if you were to sell a cash secure put on it to January 2026, the stock is at 220. But you say, I don't want it at 220. I'm more comfortable buying it at $190. So it would have to come down $30 from where it is. That's a dramatic hit, right? And you're like, right now, someone is paying $825. That's the average between the bid and the ask for Snowflake $190 cash secure put expiring January 2026. Ask is 35, bid is 15. So what you're going to do is you're going to do an 875 ask. So that's basically $40 more than what they're trying to pay you now as an ask, right? Meaning that it's really 825. So you want it for 50 more dollars. You're like, I want it, but I want to get paid even more. So the ask is at 835. You say, I'm gonna go $40 more than that. And you do 875. That's a stink ask. Because it's you know, it's very unlikely to happen, but it's not like it can't happen. Like for whatever reasons, let's say Monday, there's just a quick sell off of Snowflake. Somebody has to raise capital somewhere, and they're like, I just want to dump this, million shares of Snowflake, 150 million, or sorry, half a million shares of Snowflake because I'm trying to raise capital for whatever reasons. One of the outfits that owned it at 100 wants to take profit, and they're like, we're gonna sell it 220. Well, that's going to take a hit and it's going to go down fast, right? It's going to go from 220 to 210 really quick, like that. And it's just going to be a big drop. And then, the algos are going to be confused. They don't know what to ask because it wasn't something that it was gradual, right? It was just so sudden. They won't know what to ask. So you go in and you're like 875, boom, and you're there. The algos will come out. You're then basically the only one there, and then you get taken out. Boom. And then the algo's like, oh, 875. That somebody was willing to pay that. They'll go to 875 or they'll go to 885. But they won't get filled because it's probably not going to get to that point. In which case then, but you got hit, you got filled. Right? That's an ask. And it happens, believe it. Sometimes I've done something stupid, like if something was like $1 and I asked for $2 and it got filled. Something stupid. And I was like, holy shit, I was just being stupid. And I just, for whatever reasons, I put two and it got filled. It happens, and once in a while, you get lucky. And I'll tell you that right now, I'd rather be rich and lucky than I'd rather be right. All right, what do we got here? Carl Seamark's in the house saying, "Oh, stocks are too high. PayPal going down again. Then, PayPal. You mean? Yeah, I mean, I don't even follow PayPal right now, brother. But Christian White is saying hold until the rate cut. What are you holding? Like, what are you holding for? What are you holding? Like, I don't understand. Like, if I see something that say for example, QBTS decides to drop tomorrow 10%, right? Should I wait for a rate cut to go in and maybe do a cash secure put? Why would I do that when I could just go in and do a $15 cash secure put out to like 2026, bring in a chunk of premium? If I bring $3 on that cash secure put for the 15, I'm essentially buying it at 12. The stock's sitting at 1765. If it goes down 10%, that's almost $2, right? So it'll be like at 15 something, 16 bucks. Yeah, I don't think I want to wait. If the stock is telling me that's where it's at right now, I don't want to wait for that. If let's say for whatever reasons tomorrow SOFI goes up, 7, 8, 10%, then tomorrow, I will be selling covered calls out to January 2026 or November, and then bring in some money. I don't have to wait for a rate cut if the stock is telling me, that the premium is there. Now, you know why? Because I don't know what's going to happen Wednesday. I don't know what's going to happen. There could be a rate cut, but I don't know if there will be. It's everything is pointing that way. Yeah, but I don't know for sure. Anything can happen, right? And what if there's a 50 base rate cut? In which case the stocks fly, right? Well, then my cash secure puts that I sell tomorrow, they're going to be worth a lot less. Great. Then I buy them back for like a 40-50% return on investment within 24 hours or 2 days instead of waiting for January, right? So you don't have to fold your arms until Jerome Powell speaks. Now, if you already sold cash secure puts and sold covered calls and you want to wait, that's absolutely fair. Or if you're nervous as to what to do, and you're like, oh, I don't really want to make any moves because I'm just totally okay. But I mean, you're basically putting yourself at the mercy of the market, right? I I'm a trader, man. I am not scared of the upside. I'm not scared of the downside. If it's a stock that I want and I see that it goes down 10-15%, I'll do a cash secure put on it. And if it's a stock that I'm holding and it goes up 10-15% before Jerome Powell speaks, then I'll sell some covered calls on it, because I don't know what's going to happen. But I know that the stock is there right now. You take advantage of it. There's nothing wrong. Now sometimes, if you're unsure about what to do and you're nervous, totally okay. Totally okay with folding your arms. And sometimes that's the hardest thing to do. Sometimes the hardest thing to do is fold your arms. I understand. I've been there, but I personally, like I said, see what the stock tells you, right? I'm not going to go in and just do a cash secure put, just to do a cash secure put, or a covered call just to do it. No, the conditions have to be met, right? Like a stock has to be in the green and up 5, 10, 15% for me to sell a covered call. Or a stock has to be in the red 10%, 15, 20% for me to go with a cash secure put. And it's got to be stock that I don't mind owning for at least 5 years. That's another thing. And if for whatever reasons you decide that, you do cash secure puts and the stock falls even more, and then you get placed those shares, you shouldn't be angry, because you chose to go through a cash secure put. You looked at what the market conditions were. You looked at the numbers. You picked this price. You picked the strike. You picked the date, and you got put those shares. Great. It's a stock you wanted to own anyways. Anyhow, my fellow simpletons and degenerates, I'm gonna be heading out now. I hear my little ones outside, and they probably want some quality time with dad. And I'm wondering if they want some more sardines, man. I, you know, I, I don't know why, but I just decided to tell my wife, what would be so cool if we bought all these sardines from around the world. I something, and some guy was just like sardines that were the best in the world. And I was like, I don't know if they're the best in the world. I've had some sardines that are extremely delicious, and I like sardines. I'm one of those people, you know. I don't know if I'm a sardine snob because I don't eat them that often, but I do like, I don't mind paying $7, $8 for a can of sardines. And I've been to Spain. Um, I've been to Barcelona. I've been to Madrid, and I know good sardines. Over there in Barcelona, you can actually go into like bars. Well, I don't know if they're bars. Would they be bar? They're like cigar bars. So yeah, I guess so. Yeah, and you have a lot of men mainly in there, but you'll go in and there's like they sell you caña, which is beer, right? Like on tap, or spirits, and you see up where all these top shelf liquor is, right? But you'll see some cans there. And you're like, what the hell is like? What's up with that? They're like, oh, they're sardines, right? And you're like, sardines, and they're like, oh yeah, we have the best. And then you're like, okay, well, let me see what you got. And they have sardines that are from like San Sebastian, Portugal. They have some from France, but they have some Morocco, and in Spain. They're like very particular about and very proud about their sardines, especially in Barcelona. Um, and I was like, how much is that? And I thought he was going to say 2 or 3 euros. He was like 18 euros. I was like, what the fuck? I was like, what are the sardines? Like, are they made of like gold sprinkled on them already? And he said, no, no, no. You don't understand. These aren't just any sardines. And he told me, these sardines are made in a specific place, and then they're only they only come out, I think from October to November. That's the only time that these fish are out, and they have to be processed like within the day. And he knows the family, where this little village is, and they process them, and they use the best olive oil. And then, he knows the people that work there, and they can them right there. And there's not many places on earth that do this, right? So he said, and the amount of labor that takes, and the amount of the amount of money that they pay for the olive oil, that's supposed to be some of the top olive oil, and then they're worth every penny. When you eat them, you just they're not fishy at all, and it's just like they have like these little like peppers that they put in, one pepper per can, and they put it like corn peppers too, and then you have like a little slice of like onion there, and a little slice of like carrot, right? And then they're like the olive oil itself, man. I can't tell you enough. Just the olive oil itself. You just go and you put the olive oil on the plate, and then you get the bread that they give you, and then you dip it and you eat it. It's just the olive oil, just the taste, the flavor. Like just so light, and you can just tell it was extra virgin, like extra virgin olive oil, and it's just so light, and it's just the taste that it's just, and then you drink it with a beer. It's just God, it's such an experience. And so anyway, so I know good sardines, and this dude was saying, "Oh, these are the best sardines on earth." And I was like, well, "Let me see if it's true, right?" And then we go, and we found them, and then I was like, "You know what? I don't know if they were like the best sardines on earth." So I went, on Amazon, and I saw some sardines from Portugal, some sardines from Spain, and I was like, and I was like, oh, let's check these out, right? And I got like 4 or 5 different brands, and I was looking at the ingredients, and I remember seeing some of those cans, and I was just like, let's try that one. And so we just had a sardine party in for lunch, and I'm just wondering if my sons are gonna go. My son, especially the 6-year-old, was just going nuts because he said, "Oh my god!" He's like, "Yummy!" Like, of course, he likes the $9 canned sardine, right? Um, and so I'm wondering. I hear him outside. He's probably talking about having sardines for dinner now because he is a favorite food now. So it's a trip. And so, anyways, I had to tell you the backstory because of the sardines, but uh, let's see. Juan Velasquez saying, "What do you think about selling SoFi cash puts $25 and sell $30 cash puts to December just to safeguard in the movement? Selling 25s and sell $30 cash puts. So you want to do 25s and 30s to safeguard the investment? I don't get it. Oh, $30 covered calls. Um, I like the covered calls. I why don't you do $30 covered call? Like, this is not financial advice, obviously, but like what I would do is, if SoFi runs 5% tomorrow or more, it's already like a 26, 27, right? So it runs. There's a $28 ceiling there. It seems like it gets popped every time it gets there. It gets pushed down. So wait for it to run 5% at least, and sell those 30s to January. Bring in a nice premium. It should be over $2 right now, easily $2.50 to $3 maybe even. So do that, and then why don't you do $30 cash if your puts out to June? Why don't you do that? And so you're basically keeping it at 30 and at 30, but you're going in farther out to bring in way more premium on that $30 cash secure put on SoFi, because I don't think SoFi is going to be $30 for much longer. Now, SoFi is going to 35. It's just going to go, but no crystal ball here, my friend. I was telling people SoFi was a $25, $30 stock. It's there now. Yeah, we don't know what their quarterly earnings are going to show. I don't think they're going to be. I think they'll be great, but I don't think they're going to be as stellar as the ones that just happened. Just because I don't think people are saving as much money right now. If you look at all the reports that we'll be looking at, that they're out there, the the delinquencies are up when it comes to credit cards. The people are actually taking out loans to pay for groceries. I've never heard that before. I've never seen that. Um, the unemployment is high. People are losing more jobs than we are creating, right? Um, People are not saving as much money because there's not much money to save. Everybody's spending more. Inflation is higher. It's just it's a lot of ifs with SoFi. Not saying they're not going to have good numbers. I'm just saying I'm not expecting them to be as stellar as the ones we just had. Not saying SoFi is a bad company at all. I'm saying that it's just, I don't know. I don't know if it's going to go to 35 by January. Maybe by March, maybe April. I don't know. It's hard to say, because there's a lot of ifs right now. And then there's the economy's, it's not the greatest, man. Strangely enough, SoFi, it's one of the companies that's going to make money during the recession because, if and when Fed rates get cuts happen, SoFi is going to be able to loan, money at more attractive rates. So loans are going to be doing well. And SoFi does happen to mitigate because they loan to people that have, on average a 760 credit score, right? A FICO score. So I mean, those are not bad things. I just don't know if it'll be $35 by January, right? So that's why I'm saying if you sell some $30 covered calls, you'll be good, and then some $30 cash secure puts, because I don't think it'll be $30 by next, April. I just don't think it'll be. I think it'll be like close to it, but I don't think it'll be $30, and those are safe. Premium of the option is saying, can you dip a bagel in olive oil? Asking for a friend. Toast the bagel, right? And hear me out. There's these Moroccan. If you like spiciness, right? Hold on, let me see. There's these Moroccan. There's these Moroccan sardines in olive oil. These are it? I think these are it. I want to say they're it. These are it. Nuri Portuguese sardines. Why am I getting you over here, clown? I don't know if you guys can see this. Nuri spice sardines. Oh, because it's DoorDash. That's why. Okay. Nuri spice sardines. Yeah. These are the ones. I found them, my friends. Yes. Can you guys see this? Let me see if you guys can see it. No, you can't. All right, hold on. Let me share this, guys. Let's start with this one. And I'm gonna share the Nuri. Yeah, can you see it? Yes. There it is. There it is. Now check it out. Premium. These right here, my friend. These right here. I don't know if you guys can see it, man. But these puppies right here are excellent. Excellent, excellent. If you like a little kick, right? And when you're eating sardines, or if you've never tried sardines, can I just tell you guys, I would let's see here. What's a good beer that would go with it? Uh, Blue Moon. I can see a Blue Moon. Um, with the so thing about Blue Moon is if you're gonna get a Blue Moon, make sure you have an orange, and then you have to squeeze some drops of orange into the Blue Moon, like slice, like you would like a lemon slice, right? And then squeeze that into the Blue Moon. I fucking promise you. I don't know what they did, these people, man, but that makes a big difference. And it accentuates the taste of the Blue Moon. It's delicious, especially if you're like super chilled. Or you could do a Modelo, like a Modelo, like the light beer, the Modelo, the one that looks like a Corona. You do Corona with this. Do a toasted bagel, and then dip the toasted bagel on that olive oil that's gonna come out of there. Listen, Poto, I'm telling you right now, bro, game changer. Game changer. That fucking sardines are insanely good. Delicious. Delicious. You all you have to do is sell one covered call of something and you'll be able to afford it. Um, Andres de la Torre said, I do also mix fresh garlic in the olive oil. Yeah, you can. You absolutely can. But I don't see. The thing is, I would rather not mess with the flavor because it's already, everything's perfect, right? What I would do is, what I would do is, I would do the garlic head, right, in a tin foil, right, a little bit of foil. I put some olive oil in a little in a little salt, and I close it, and then I put it on the air fryer, for like I don't know 5 minutes at like 400 or something like that, and then I would take it, and then I would the toasted bread, like I would like a ciabatta bread would be great, or like I don't know, like a French baguette, and then you obviously have to toast the bread, right, a little bit, not too much where it's super hard, but just hard enough, and then you coat it with a little you grab the garlic, right, and and then you kind of mash it into the bread because it's gonna be like creamy at that point, and then you put some of the olive oil from the can, right, and then don't do nothing, a little salt, and they just have it by itself like that. Oh my god, dude! Listen, I am a food connoisseur, my friend. I'll tell you that right now. I am a foodie, so I have some. And I don't want to be fucking sound braggish here. Like I don't want to sound braggadocious, but I have had some really really good meals at places that have actually earned a Michelin star after I went there, just because I knew the chef or of the chef, and I actually happened to go with my wife. I want to say like 15 years ago, maybe not at 15, maybe closer to 12. Um, we used to go to this restaurant in San Francisco that was at the uh, oh gosh, what's the name of this? The Intercontinental in San Francisco. It had just opened and they had a great chef. Her name is Dominique Cren. Anyways, so excellent chef. And one day we saw her at like on the fucking Iron Chef, and we were like, "Is that Dominique?" And she was just going at it, and she's actually one of the Iron Chefs now. But anyways, so she opened her own restaurant called Atelier Cran in San Francisco, and we ended up going there a couple of times and had probably some of the best meals of our life there when she was just fucking going nuts cooking. She was just such hard worker, and she would come out to our table. She literally would say, "How's your dinner? How do you like it? Is it good? Is everything good? It was everything for according to your dietary needs. Did everything expect meet your expectations?" And like, my wife actually, she had never had clams, and she would hate them. She hated clams and oysters. I mean, and she was given an oyster, um, and she was like, "Oh, I don't think I want it." And I told her, "I think you should have it." because I had it and it was just the best oyster I've had in my life. It had no fish in it, nothing. It was like creamy. It's just perfect. Everything was balanced. It was so fresh, and it was just like and it was from like I don't know, like I think it was from like the Greek islands somewhere in some area, and it was flown that day. It was crazy. But anyway, so my wife had it, and she was shocked because she was that was delicious, and I just that's just what an amazing chef will do. Is just they will change your mindset on things that you think you don't like just because you may have had a bad experience, so you've never been challenged by something that's very well made and the ingredients are just top notch. So I've been to restaurants that were that expensive and extremely delicious, and I've also had some fucking amazing dishes that cost like 50 cents in Vietnam, like a fucking bowl of like bumbaway or like pho. And it was just like the explosion of flavors is just insane. Like, these are flavors that are like alien foreign to me because I'm from like the West Coast and California here in the U.S. and like the flavors that I'm eating are from like Asia and like some specific areas, and they only grow there. These ingredients, and it just wow. So if you're a foodie, you're gonna find amazing food anywhere, and like just if I tell you that these sardines are really good, and to try them with with like a ciabatta bread that's toasted and just by itself, you don't need anything, just the oil, and then put the sardine there with maybe like a little piece of the pepper, a little sea salt. It can't be like kosher salt. It can't be. Just try like sea salt. It's got to be there. It's gonna bring the brininess out, and you bite it, and then you wash it down with like a blue moon with like a little orange in it. But it's got to be like the orange. It can't be orange juice. Please don't do that. It's just a little bit, a couple of drops of the orange itself. Um, it's a whole different ballgame. More like like a Corona. It washed down perfectly with that. I also mix fresh garlic in the olive oil. Yeah, I guess you could. I didn't want to mess with the flavor. At least not today. Carl Seamark saying I sold some $35 puts on SoFi for June 2026. My break even is something like 22. That is great. That's a great cash secure put, my friend. You running $11. That's a hats off to you, Carl. That's a fucking great right. Are you doing anything with Neo? No, I'm out of it. I had some calls. I actually bought calls on Neo, and I think there were $15 calls expiring in 2027, and I got them for like 20 cents, 25 cents, and I sold them for like 150, and I'm out. It was like I was like 100. I had like 100 calls. Chuck Blow saying Eric Jackson meeting with Trump's Monday OMG open door. Yep. Eric Jackson's meeting with Trump. Yes, I know. Yep. I'm telling you, man, open door is gonna squeeze. I've been telling y'all. Selling some $8 cash secure puts, not terrible. Juan Velasquez saying, wow, I like that. 30 Savage, thanks so much. You got it, brother, no problem. I do know that you're gonna go to Spain. So you want to think as least as possible when you're out there, Juan, and so have a great trip, man, and enjoy Spain, and definitely go to like, dude, have some sardines somewhere. And let me know, how good they are, and I can't wait for you to, if you can, tune in when you're in Spain for like 15 minutes and just let us know how you're doing, and let me know what you're eating over there, man. If you're in some sardines over there at some spot with some beer, fuck, we'd love to hear it. Carl is saying I make tomato ketchup with homegrown tomatoes, blows shop bought out of the water. Absolutely, absolutely. Anything that you make yourself, if how to do it, it blows anything out of the water. I make my own spiced olive oil, and I make my own um, chili. Like there's this Chinese crushed chili that you could put like in different foods. What I do is I heat, olive oil to like, I like medium heat for like 5 minutes, and then I'll throw in like all these chilies, and they're like these they're like Thai chilies, and I throw in maybe like a ton of garlic cloves in there, and then they just infuse the olive oil. But you don't wait until it like cooks. Like that's not what you're doing. You put them in there for like 2 minutes, right? And then you let them sit, right? And you can get it off of the heat, and you just let them sit there overnight. And then you come the next day, you take all your chilies out, and you put them in a glass, in a jar, and you start crushing them in there, or you can leave them whole. It doesn't matter. And then you seal it, right? And then you put some of that oil if you want, and then you do the same thing with the garlic. You take the garlic, and then it's already infused with the chili, and it's already infused with the olive oil, and then you throw it in there, and you put a little olive oil in there, right? And you mason jar again, seal it, and then the rest, you kind of uh, you have to. You strain it, right? The olive oil right into like a mason jar, and then all that olive oil, you just you save it. And anytime I want to make some spicy, scrambled eggs or like eggs over medium or whatever, I'll use that oil, and then it's infused with like spiciness and garlic, and then or some scrambled eggs, whatever, right? And then just use that, and then I'll put some of that oil or that crushed garlic. The garlic, I'll crush it into the bread, and I'll eat my eggs like that. And it's just so much flavor. Juan is saying, thanks, bro. Yes, I'll have sardines. We're leaving on Wednesday. Okay, right on. We'll tune in. I can't function without checking the market, and we'll tune in for sure. No, it's all good. I do the same thing, even when we're, in Hawaii. It was a tricky because the difference in time, and it's like the market opened extremely early. But I was trading, and it's a trip because when you make a really good trade, or you take money off of the table during a trade, during a vacation, I mean, it's like mind blowing because you're on vacation. It takes you no time. All you need is your phone and good internet connectivity, right? And you're making money. Like you're on vacation and you're literally just making money. So you're basically paying for that vacation while you're vacationing. It's a hack, right? And like imagine doing like a trade that's like, I don't know, $4,000 or $5,000, right? Like your trip is probably costing half that, and then you make it right off the bat. Thank you, gamblers. That's just how you do it, my friend. Anyways, guys, I gotta go for real this time. I said that half an hour ago, but thank you for watching. I appreciate you guys. I'm gonna go on tomorrow at 8:30 a.m. California time. Yeah, you guys have a great night. Uh, I'm the Savage Wall Street, baby. And you guys know the deal, man. I appreciate you guys so much. Juan Velasquez, thanks for watching. Carlos, thanks for watching. We will head out to Mercado San Miguel and have some oysters as well. I know I've had them. They're delicious and fresh. Yes, they are. I told you, there's right in the corner. There is an Irish pub where they have some amazing Guinness on tap. It's amazing. UK saying take care, Savage UK. Thank you for watching, brother. Chuck Blow saying Eric Jack. Chuck Blow, thank you for watching. Andres Torres, thank you for watching. Poto, thank you for watching. Hector, thank you for watching. Christian Seymour, Christian White, thank you for watching. Charlie C2, thank you for watching. Um, Dude, thank you for watching. James of the Trees, always be writing. Moneymaker Juan. Guys, I appreciate you guys so much. Hopefully, I'll see you guys tomorrow. Tune in at 8:30 a.m. California time. You know the deal. I'm Savage of Wall Street, baby. Take care, knuckleheads. Have a great night. Until then, peace.